The only deal I've ever lost money on. I'm gonna go over the entire thing with you right now. So, I've only lost money on one apartment building ever. Okay, knock on wood. Now, I come from residential and I used to flip houses and I was really shitty at flipping houses. So you can expect, I lost a lot of money on those, right? Like, so I'm not talking about the flipping houses side, I'm talking about apartment buildings. I only focus on apartment buildings now because apartment buildings are very predictable about how to make money on it. So how the heck, if it's so predictable, Tim, did you lose money on a deal? Well, let's dive in. So early on in my apartment investing career, I was doing a lot of turnkey single family flips. I had a management company and I was accumulating some smaller apartment buildings to build my balance sheet, to build up my portfolio and then be able to qualify for bigger and bigger deals. A buddy of mine had reached out and I'd done some deals with him and we've grabbed drinks before and even with our wives and went out to dinner and stuff. And so I knew this guy decently well. He hits me up and he's like, hey man, I own this 44 unit apartment building in the C-class area of Cleveland and I'm out of state, I can't give it the time, I can't dedicate the attention that I need to it, and I just want to sell it. Do you have anybody who would be wanting to buy it, or would you want to buy it? And so I was like, all right, well, you know, what does it look like? It's like, hey, we renovated it, we put a whole bunch of money in over the past few years, and it's 80% occupied, so it's almost there. So I'm doing some math on it, and I realize I could probably turn these last, 20% of the units, which is like nine apartments, and flip this thing out to one of these turnkey buyers that I was already working with and make around $300,000 in a 6-month time frame. So I'm like, hey man, I'll take this thing off your hands. I actually had a private money investor who had been chirping in my ear saying, Tim, let's go. I got some money, let's buy some apartment buildings. And you hear that enough times and all of a sudden you're like, okay, let's go buy some apartment buildings. And that's where my head was. So I had this guy saying, I got money. I got this other guy saying, hey, you can buy this building. And I'm thinking I can make 300 grand on it pretty quickly, pretty easily in a 6-month time frame. I wanted to pull the trigger on it. So I brought in my private money investor. We structured it a little bit differently. He wanted 50% ownership in the deal. So I gave him 50% ownership in the deal, no fixed return on investment, so he didn't make any interest payments or anything like that. He got 50% of the upside for bringing around $250,000 to the deal. So I was able to get in without any money out of my own pocket, and I had 50% of the project. My team could stabilize this thing, turn it around in 6 months, sell it off. We'd make 150 grand. He'd make a great return as well. So I end up buying it, and my team and I go in there and we're looking at the rent roll and we're going in, we're notifying all the tenants of where to pay rent, and quickly realized that although it was 80% physically occupied, that is not the same thing as economically occupied. Economically occupied means are people paying? And although it was 80% physically occupied, the building was only 25% economically occupied. That means out of 44 units, 11 tenants were paying rent. So not only did I have to evict and spend a bunch of money to kick out 25 tenants, I also didn't have the revenue coming in on those 25 tenants, and I then had to renovate all those units, 25 more units. So now all of a sudden this deal that was gonna take 6 months and we're gonna make 300 grand on got prolonged significantly. It turned into a 1.5 year long project. And not only did we not make $300,000 on it, it came to a point where we were so tired and so jaded by the apartment building because it was so management intensive. It was a C-class property, which means we had C-class tenants. Let me give you an example of what C-class tenants like to do. I remember getting a phone call one time from our dumpster service, and they said, hey, we can't take the dumpster because there's a bunch of stuff piled on top of the dumpster. And so all of a sudden we got to call, 2 guys in a truck to come out, take all the stuff off the dumpster, and then we have to clear out the dumpster itself because they wouldn't empty it. So the team sends some people out there, they clear off the mattresses and the garbage bags and everything else that's on top of the dumpster. And then they open up the dumpster, and inside the dumpster, it was empty. So the tenants were just too lazy to lift the dumpster lid and throw their bag in. And because they were so lazy, I still got charged from the dumpster service, even though they didn't take any trash. And then I had to pay all these other people to take all the trash out. And it was like, that was the culminating point where I was like, let's dump this friggin' property. I don't want this thing anymore. And it came to this point where I was like, let's sell it. And although it was a year and a half later, and we were gonna lose money on it, I had to sell it at a price point where I had to actually pull money out of my pocket and drop around $40,000 to get rid of the property. And I did it because of the opportunity cost of my team and how much time they were spending on that deal, where they could have been spending time doing bigger, better things. Here's the magic of this whole thing. If I didn't want to sell it, I could have just sat on the property. I could have let it cash flow, pay down principal for another 2 years, appreciate for another 2 years, and then sell the property and at least break even, maybe even make money on it. That's the magic of multifamily real estate. I didn't have to lose money. I chose to lose money on that deal because of the opportunity cost that was associated with it. And what it allowed me to do was get my investor paid back, get my team freed up, and allow us to go focus on bigger deals. Now, how did it play out for the investor? Technically, he was a 50-50 owner. Technically, he was responsible for $20,000 of that $40,000 loss. Technically, he didn't earn any return on his investment during that time period. But is that the right thing to do? He fulfilled his part. He brought the cash. You know who messed up? Tim and Tim's team, because we did not cross-reference the rent roll with actual collections. That's not his fault. It's my fault. I should have known better. I shouldn't have taken his word for it, the seller's word for it. And because I messed up, I'm not going to make my private lender, foot the bill on that. So I took 40 grand out of my pocket and I paid for the entire loss. My investor got his $250,000 back. And because he didn't earn a return on his investment for 2 years, what I ended up doing is I gave him equity in another deal that I didn't make him invest in, that yielded him around 25% return on his investment. So although he put 250 grand up on this deal, didn't make any money, he got all that money back. I gave him equity over here that was worth around $80,000, $75,000, $80,000. So we got equity in this other deal just to do the right thing, right? And if you treat your investors really, really well, they will go to bat for you. So he's one of the people who champions me more than anybody else. One of my biggest cheerleaders, saying, Bratz does the right thing. Bratz takes care of us. He would never let his investors lose any money, and that's the character and the reputation that I've built up, right? Now, if I let him lose money on that, I said, hey man, too bad, too sad, like you're a big boy, this is the real risk that you have going and investing in real estate. All of a sudden, that wouldn't have gone over so well. He would have accepted it, but he wouldn't be championing me as much as he has been. So you do the right thing, right? Realizing that worst case scenario in real estate, you hold on to it. You let it cash flow. You let principal mortgage pay down. You let the property appreciate and rents to get bumped up. And eventually over time, even if you do mess up on a deal, chances are it'll cash flow and you can keep on creating that equity spread over time. And eventually you'll break even, maybe even make a profit on it. It's the beauty of multifamily real estate. So that is the only deal I've ever lost money on, and I chose to lose money on it. Hopefully that was helpful. Hopefully there's a lot of lessons that you took away from that. Everything from due diligence and not skimping on that. Everything from don't get into heavy C-class and D-class type properties, at least not to manage long-term. Maybe you can wholesale it off and flip it out pretty quickly, but don't get stuck on some of those things. Third is take care of your tenants. Fourth is focus on what is going to create the highest return on your time and on your team's time. and making sure that if you need to cut your losses and focus on bigger, better opportunities. So if this is helpful for you, please like the video. Please send me over some comments. Let me know your thoughts on it. Subscribe to the YouTube channel. Make sure you click that notification bell too, so that way you get all the new videos that we're sending out. And again, share this with friends, other business associates, people that you know that would get a lot of value out of this. So I appreciate you, and until next time, be your best.